Good morning. You're watching All You Need to Know on Bloomberg Quint Live, India's first live streaming digital news service. I am Jayesh Khilnani, and alongside me is Agam Makil to take us through the FNO space. But let's have a look at what cues did we get overnight and what can we expect in today morning's trade. If you look at the US market, the Dow Jones actually extended its loss to the second straight day and closed about more than 80 points in the red. And you had the Nasdaq, which actually closed about 0.8% lower as well. As far as the European markets are concerned, we got a mixed close from there. And if you look at the Asian markets, we have largely open in the red, with the Nikkei, which is down about 0.1%. That has in fact recovered from the intraday lows that we clocked. Now, if you look at the SGX Nifty, that is indicating a negative start of about 0.5% for the Nifty and an open which will be below 10,550. But as far as the ADR picture is concerned, we had mixed cues coming in from that as well, where we had Vedanta and Infosys, which led the way with a gain of about 1.5% to 2% for them. Wipro and HDFC Bank managed to close higher as well. As far as the losers are concerned on the ADRs, we had Tata Motors, which actually declined nearly 2% in trade, followed by ICICI Bank and Dr. Reddy's, which also closed in the negative. Now, if you look at the commodity space, oil is largely trading flat. So we have WTI, which is above the $68 per barrel mark, and we have Brent, which is nearly $74 per barrel mark now. Most of the cues that we got from the commodity space was from the base metals, which actually managed to decline in trade. In fact, if you look at the entire base metal space, that in fact closed in the red, largely led by aluminium, which declined as much as 2%. And we had zinc, nickel and lead, which had a cut of more than 1% each. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a negative note, led by aluminium, which is down close to 1.8%. Now, if you look at the fund flows that we got for the Indian markets yesterday, FIIs were net sellers once again. So they sold about 625 crores over there. We had the DIs, which actually pumped in nearly 450 crores. But for the month, the trend continues. FIIs have in fact sold more than 3,000 crores, while the DIs have bought nearly 5,500 crores for themselves. Now, if you look at some of the key indices that we had, the Nifty actually closed about 40 points higher for itself, but the last couple of days has been largely range bound for itself. We had the Nifty mid cap and the small cap index, which saw a last hour surge for themselves, and they closed about 0.6 to 0.7 in the green. Now, if you look at some of the key gainers that we had, Nifty Metal was the the biggest gainer that we had for the index. That surged nearly 5% in trade, followed by Nifty IT, which also managed to surge more than 1% for itself. As far as the losers are concerned, we had the Nifty Energy Index, which was the only sectoral loser in trade yesterday, down about 0.4%, largely led by the oil marketing companies. And if you have a look at the VIX, that actually declined in trade to the tune of about 2.6%. As far as the contribution is concerned, it was largely led by the commodity names Vedanta, Hindalco, and also L&T and ITC. While on the declining side, we had the oil marketing companies followed by Titan. But Agam, what can we expect from the futures and options market?
Sure, Jayesh, as you put it, we've seen about a 39% gain in the Nifty, and well, it's closed above the mark of 10,555. That said, consolidation continues, and we really haven't seen too much change with respect to the Nifty futures, or for that matter, the Bank Nifty futures. But when it comes to the volatility index, on expected lines, it's fallen below the mark of 14, and no change in the put-call ratio, at least no substantial change, currently standing at around 1.63. We've seen Balrampur Chini enter the FNO band, so expected restricted trade there, but a lot of longs building up in counters such as okay, so I'll come back to the stocks. Let me also take you through the big movers with respect to options, and we have well 10,500 put, which has seen a little more increase in open interest, and we're looking at base building there. As I was mentioning earlier, we've seen Balrampur Chini enter the band, so expect restricted trade there, and of course a lot of longs building up in Nalco on the back of aluminium prices, which has moved up substantially, and also a good increase in open interest indicating longs. V-Guard extends its strength, so longs coming in there as well. And on the losing end, we have BPCL, which was also the top Nifty loser yesterday, and which has seen an accumulation of nearly 18% in open interest towards fresh shorts. So plenty of stocks to watch out for, but information technology sector and specifically TCS will also remain in focus in today's day of trade. But that's as far as our own markets are concerned. Let's now go across to Stephen Engel of Bloomberg for all the headlines from across the globe.
AMP CEO Craig Miller is standing down with immediate effect as the financial services giant apologizes unreservedly for what it calls misconduct and failures. AMP has admitted misleading and lying to Australia's securities regulator, overcharging customers for services they didn't receive. Bell Potter analysts say the entire board will have to step down, and AMP may face class action lawsuits from investors and advisors. Well, the Australian government says it's increasing criminal penalties for corporate misconduct with legislation to be passed this year. The 30 proposed measures include prison terms of up to 10 years, the banning of licensing powers of the Australian Securities and Investment Commission would also be increased. The announcement comes as the Royal Commission investigates the banking industry.
These issues, while as abhorrent as they are completely separate from any question about the stability and strength of Australia's banking and financial system. That is rock solid. In fact, Australia's banking and financial system is one of the strongest in the world.
Well, in other news, Bank of England Governor Mark Carney says the UK should prepare for rate rises over the next few years, but he's hinted the widely expected hike next month is not a done deal. The pound fell as the Z said policymakers will make their decision knowing there are more chances to act later in the year. Carney also acknowledged recent soft economic data, but said the MPC would consider things in a wider context. And here in Asia, South Korean President Moon Jae-in says the North has dropped a major sticking point to a summit with the United States. He says Kim Jong-un is no longer making the withdrawal of American troops from the peninsula a precondition for ending his nuclear weapons program. The U.S. has almost 30,000 personnel in South Korea. Moon and Kim meet next week ahead of a potential summit with President Trump in May or June. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Stephen Engel. This is Bloomberg.
Back to local equity markets, stock of the day is Mahindra CIE Automotive. The company has reported strong set of numbers. If you look at the top line growth, we're looking at an expansion of 32% year-on-year basis to a number of 612 crore as compared to 465 crore that we've seen in the corresponding quarter of the previous year. Profitability is a good show for the company. More than two folds jump for the company at a number of 39 crore as compared to nearly 17 crore that we've seen in the corresponding quarter. It's been a healthy performance even on operating level front. EBITDA has shot up by as much as 69% for this company to a number of 75 odd crore as compared to nearly 44 crore that we've seen in the March quarter of the previous year. Margins have expanded to 12.2% as compared to nearly 9.5% that we've seen in the corresponding quarter. So what has led to good show by the company? While raw material expense as a percent to your net sales, that as a percent to your net sales have come down to 56% as compared to 54% that we've seen. What has led to good show on the profitability front will be your cost saving techniques along with the other income and lower finance costs is what has led to a good show on the bottom line front. Other income has risen jumped almost 2.5 times for this company to a number of 6.1 crore as compared to 2.43 crore that we've seen in the corresponding quarter. So is the case with finance costs. That's declined by as much as 53% for this company to a number of 1.5 crore as compared to 3 crore that we've seen in the corresponding quarter. Also, the company has been making regular profits but has not been paying out dividend, and also it has a low return on equity of 8.12% for the last 3 years. However, it is planning an inorganic expansion by the way of acquisition or by the way of partner route and plans to cater to Japanese OEMs. Thank you.
Well, speaking about currency and commodities market, talking about Indian rupee first, it continued its losing streak for the 4th consecutive session yesterday to end near 13-month low of 65.80 levels against the dollar. Now, surging crude oil prices and likely fiscal slippages led to subdued forex market sentiments yesterday. Remember, the domestic unit has weakened close to 60 paise in this week against the dollar. Well, speaking of the bond market, sovereign bonds declined yesterday as yield on the benchmark 10-year security rose to its highest level in more than a month. It rose about 9 basis points to end at 7.63%. Now, in terms of flows into debt market, global funds reduced their rupee debt holdings yesterday for the 5th consecutive session. They reduced their debt portfolio by close to 1,660 crores according to NSDL data. Well, on the global front, dollar index ended higher for the 3rd straight session yesterday, and it now trades steady near 89.95 levels in the early Asian hours. Now, this is well below the crucial 90 mark. Elsewhere, pound declined to near a 2-week low against the dollar after Bank of England Governor Mark Carney stated that any interest rate hikes by the central bank will be gradual, and Brexit could further delay rate hike movement by the bank. And lastly, speaking of dollar rupee, now it is trading 30 paise weaker in the non-deliverable forward market at 66.10 levels against the dollar, which indicates a weak opening for Indian rupee in today's trades. Now, having said that, let's shift focus to commodity space. Good morning, Jayesh. All base metals are trading in the sea of red today. What hues are you picking up from there?
Morning, Saloni. That's right. In fact, all of the base metals on the London Metal Exchange and the precious metals declined in trade overnight. Now, this is largely led by aluminium, which snapped its 3-day winning streak and ended lower for the first time in 4 days. Now, there is speculation that Russia will likely to come to the aid of company Rusal and ease the supply concerns. Also, we understand from a Bloomberg survey that copper traders are most bullish on the metal since at least 2015. As far as individual base metals are concerned, we had aluminium, which declined 2%. Zinc and nickel and lead, in fact, declined more than 1% each. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a negative note, once again led by aluminium, which is trading down about 1.7 to 1.8%. Now, as far as oil markets are concerned, currently oil is trading absolutely flat, but the rally was in fact stalled overnight as OPEC is set to see the goal has actually been accomplished. Now, yesterday we had informed you about Saudi Arabia meeting. OPEC has actually met with Russia. Now, the meeting, which was behind closed doors, the data that was presented, some of that has been picked up. They have said that the global oil surplus has now in fact shrunk to its lowest level to its 5-year average, and also they say that demand supply should come into balance by June this year. So we'll have to wait and watch what exactly happens over there. Now, as far as the precious metals are concerned, we saw that gold has actually stabilized between the 1340 to 1350 mark for an ounce.
Well, in the stocks that we're tracking today are a couple of companies which reported earnings post-market hours, starting off with Reliance Power, where revenues dropped by about 2%, but net profit grew by 6%. Operationally, the performance was more or less in line with EBITDA growing by 2%, and the net margin also seeing a bump of about 140 basis points. That apart, we're also watching out for Cyient, where it was a mixed quarter where revenues exceeded estimates, but there was a small miss as far as the margins are concerned. So revenue growth of 8%, net profit grew by 34%, and as far as margins are concerned, they dropped by 40 basis points. That apart, you also have CCI, which has lowered penalties on dry cell battery makers. So they have cut the penalty on Everready Industries and Indo National Limited by 30% and 20% respectively to 172 crores and 42 crores. Now remember, this penalty was for cartelization in respect of zinc carbon dry cell batteries, and Panasonic Energy, another listed company, that was spared any penalty. So watch out for all those 3 battery makers. You also have an ET report which says that Schneider Temasek Consortium may announce a deal to buy L&T's electric and automation business by the month end, and that will be at a revised down valuation of about 13,000 crores to 15,000 crores. So watch out for L&T. Another ET report which says that Birlas are likely to sell up to 20% in Idea Payments Bank to be able to raise 200 crores. So watch out for Idea. And of course, Aditya Birla Nuvo, which holds about 49% stake in Idea Payments Bank, which has been merged into Grasim now. So also keep an eye out on Grasim on the back of this development. You have JB Chemicals, where the Pollution Control Board has ordered the company to close the Daman Formulations Unit. Negative development for the company. It contributed sizably to the company's revenues. You also have Indian Metal and Ferro Alloys, which will be in focus. They have received a total of 123 crore demand notices for alleged excessive mining that they have done. So watch out for that name. Also, a couple of bulk deals that we're tracking. Hathway Cable is one where Kenneth and Rade's Old Bridge Capital has checked into this company and bought a 2% stake. On the other hand, the seller was Morgan Stanley Asia. That apart, we also have Uniply Industries, where Malabar India Fund has bought a 6% stake, and the promoter entity has sold 6.1% stake out of the 29% stake that they held as of 31st December. So these are some of the names that you need to track and trade today.
Well, it's been a steady quarter for TCS, no doubt, considering its headline numbers are ahead of street expectations and consensus. But how has it done against its peer Infosys? Well, much better as it appears. And starting off with your revenues, even in dollar terms as well as in constant currency terms, it is well ahead of Infosys on a sequential basis with respect to growth. Coming down to the digital contribution, the digital services contribution to revenues for the entire year, well, TCS and Infosys are going head to head. Infosys may have a slight edge, but not too much to speak for. Coming down to margins, Infosys has had a better margins expansion in comparison to TCS on a quarter-on-quarter as well as a year-on-year basis. However, TCS margins are higher, and perhaps the more important thing is the outlook for FY19, and that's where TCS is much better, because they have maintained that they continue to target the 26 to 28% range in terms of operating margins. Infosys, on the other hand, has cut its guidance range from 23 to 25% to now 22 to 24%. But moving in, let's also take a look at some of the key verticals that both these companies work in. Financial services, well over 30 to 35% of their revenues come from this particular vertical. Infosys, a lackluster 0.9% growth. On the other hand, 3.8% growth registered for TCS. Manufacturing, again, is where we've seen TCS pip Infosys by quite a bit. And again, retail, as the management of TCS has suggested, that they're starting to look at some consistency in growth when it comes to the retail vertical. Coming down to client geographies as well, considering North America and Europe both contribute to as much as 80% of the revenues for both these companies, we've seen lackluster growth in both for TCS and Infosys. But the real reason why we've seen good growth coming in for TCS in this particular quarter is their performance in the United Kingdom and, well, continental Europe, should I say, in comparison to, well, TCS, Infosys, which has just done a growth of around 3.6%. Moving in, these are some of the reasons why you can expect to see TCS being assigned that 21 times price to earnings ratio, whereas for Infosys, well, it stands at around 16 times. But when it comes to analyst ratings, of course, Infosys is much better in comparison to TCS. That said, let's also listen in to what the management has to say about this particular quarter, as well as what we can expect in FY19.
If it was to be 6% as a new normal, it would be a very boring job. So we are committed to going on the 10% trajectory. In Q3, we were around 6. Q4, our year-on-year constant currency growth is 7.2. As I said, the dollar growth is 11.7. We are committed to try and get it up to that double-digit growth, and that's where the entire focus is. Capital allocation, we have always said that we've been, if you look at our history, we've always believed that about 80 to 100% should be the distribution. This year, that is, it depends on whether you look at it as a financial year or a calendar year. We have distributed 100%. We generated free cash flow of about 26,500 crores. Between dividend and share buyback, we have distributed about 26,500 crores. We expect a similar kind of 100% distribution going forward also.
If you look at last year, we have been in that range of around 25%. Our aspiration is to do higher than that. With regard to investments to be making into digital, we have been, in the last 3 to 4 years, we have been making those, and we'll continue to make those. And whatever the stability, etc., you have seen in the margins is on the back of some of those investments. So we don't see anything extraordinary about that.
I would say incrementally we are now more confident about BFS North America than we have been in the recent past, though the revenues have still not started flowing in.
Okay.
But early client discussions show that there is not much of stress left in the system. And we hope that that will translate into better spend through the course of this year. Okay. But I think Q2 will be a good quarter, or Q1, our financial Q1 and their calendar Q2 will be a good quarter to validate that.
The minutes of the Monetary Policy Committee meeting showed that the 6-member committee is split into 3 buckets. The first bucket was those in favor of a tighter monetary policy stance. That bucket still so far held only Michael Patra, who had voted for a hike in interest rates in the February and in the April policy. Viral Acharya, the minutes show, is leaning in that direction. He, of course, voted for a status quo in the April policy, but he has given a clear indication that he is likely to vote for, quote-unquote, withdrawal of accommodation in the next policy, which comes up in June. The reason he gives is twofold. One, he was watching to see whether the shale gas supply response to higher oil prices allows oil prices to remain below a certain level. He now is not sure that that will be the case because inventories are falling, so he does see elevated risk from higher global oil prices. The second thing he was watching for in the February policy was the economic recovery domestically, to see how strong it was. He now believes that there is a fair amount of momentum in the domestic economy. So keeping those two factors in mind and the need to reinforce the credibility of the inflation targeting regime, Viral Acharya said that he will likely vote for a withdrawal of accommodation in the June policy. That would make 2 people voting at least for a change in stance, if not a change in interest rates. Michael Patra, of course, continued to vote for a higher rate, and he did say that core inflation remains his key worry. He believes that core inflation pressures would mean that you will see headline inflation remain above the 4% mark. 4% is the midpoint of the MPC's inflation target, and Michael Patra does believe that in order to achieve that, in order to reinforce the credibility of the mechanism, you need to take some policy action. So that's the rate hike, or at least tighter monetary policy camp. Then there is the next one. This is the wait and watch camp, but those who seem like they're leaning a little bit towards tighter monetary policy, and Governor Urjit Patel falls in that. Now, he was very watchful with his words, so he didn't give any clear indication of which way he's leaning, but he did talk about the upside risk to inflation. And unlike in the February policy, when he said that the economic recovery remains nascent, in the April policy minutes, he does not use that word. So perhaps he too is starting to get a bit more comfortable in the economic recovery, and then will start focusing on inflation. Chetan Ghate, who's an external member, gave out a long analysis citing his own research, suggesting that the higher MSP could lead to higher inflation over almost a 6-7 quarter period, and it could feed into generalized inflation. That, together with the higher global oil prices, he thinks could add a structural element to the upside risk to inflation. So he also seems like he's a little bit more worried on that count, but they're still in the flashing orange bucket, if we can call it that. Then other 2 members, Pami Dua and Ravindra Dholakia, they are also in the wait and watch camp, but they seem to be leaning towards a delayed interest rate hike trajectory, because Ravindra Dholakia in the minutes said that he believes that they will make the 4% inflation target within the next 12 months, and Pami Dua said that the economic recovery remains lackluster. All in all, the tone of the minutes was a little tougher on inflation than the monetary policy itself had suggested, because remember, the policy actually had cut the inflation target, which led a lot of people to believe that there will be a prolonged pause on interest rates. Does that remain the case? The bond market's verdict on Friday will be important.
We have the Fortis management and the board finally evaluating binding bids which have come so far. The board also approved forming of expert independent committee to evaluate these bids. Of course, they also have appointed the Standard Chartered as an investment banker, which will be assisting and advising the independent committee. And also the board will meet on April 26th to take further action and evaluation. Remember, we also have shareholders which have called for an EGM regarding removal of 4 directors which are there in Fortis Healthcare currently. Also, Fortis spoke with Bloomberg Quint. They said that Eastbridge remains a valuable shareholder, and their concerns will be taken up regarding removal of directors, and also calling for an EGM for the same purpose. Also, they say that they are establishing a process only to evaluate the binding bids. So the non-binding bids are not under the evaluation or consideration of the board, and also the management assured and told Bloomberg Quint that they will take decisions which are in the best interest of the minority shareholders.
Now, meanwhile, Fortis Healthcare has received another offer. KKR-backed Radiant Life has submitted a non-binding offer for the hospital business of Fortis. As part of this deal, Fortis will first have to demerge its hospital business into a separate entity, excluding its 56% stake in SRL. Radiant will then make an open offer to the shareholders of the new entity, that's the demerged hospital business, at an adjusted price of 126 rupees per share, with an intention to acquire at least 26% stake. Now, if Radiant fails to acquire this stake, it will infuse a sum similar to the cost of 26% stake into the new entity. Radiant will then carry out a rights issue, which will be underwritten by them to fund the acquisition of RHT. Now, this is the fifth offer that the company has received, and this values Fortis Healthcare, including its stake in SRL, at 165 rupees per share. This is therefore the highest value that has been ascribed to the company so far. As Fortis is going through a cash crunch, Radiant has also offered to buy up to 2 hospitals immediately. Let's move on now. The Supreme Court on Thursday allowed the Sahara Group to sell part of its Ambi Valley property to raise money in order to refund investors. That's, of course, a story that you can find on the website bloombergquint.com. And telecom major Bharti Airtel is in advanced talks with video streaming giant Netflix to offer free access to Airtel TV app users. Find all that and more on the website bloombergquint.com. That's all we have for you in this edition of All You Need to Know. Up next, though, is Indian Open, and that'll take you through Market Open. Thanks for watching. This is Bloomberg Quint.